Adrian, when does the show start?
Investor Beat starts now.
Thanks for watching. I'm Chris Hill, joined in studio by Ron Gross. Always nice to get...
Who was that woman?
It's the fabulous Adrian Perryman.
Yes.
Always great to get a little help around here. We're going to wrap up the week. We got a lot to get to. Let's start with the jobs report from February. Numbers look pretty good. 175,000 jobs added in the month. Higher than expected. We had revisions up in December and January.
Is there a question here? I think we look good.
Normally, you're pessimistic about this kind of thing.
I think I've actually been optimistic for some time now, and I don't like to make predictions about these things. I kind of am more reactionary to the data because the economy is hard to predict. But I think these numbers look solid. I especially like the revisions. 175,000 jobs added is less than the average of the last 12 months, which was about 189,000. But we're still on the right track. I think it's fair to say we're kind of in an environment now where we have moderate job growth, which is nice to see.
In terms of the Fed and tapering activity, do the numbers that we see now do anything to affect whether they take their foot off the gas or maybe slow down? What do you think?
I think they stay the course and continue to slowly increase the taper, especially when they see that U6 number, the number that indicates a bigger level of employment. It's a bigger gauge. That number ticked down. I think they probably will like to see that. It indicates that tapering can continue. Yeah,
the U6 now at its lowest point since November of 08, so that's good to see.
Yep.
Safeway, we've got a big deal in the grocery industry. Safeway, the second largest grocery chain in the U.S., is going private. It's being taken private by Cerberus Private Equity. Which, for my money, that's the best name of any private equity.
Cyclops Capital would be good too.
Yeah, it would be. But you know, a three-headed dog guarding hell, that's pretty good.
Yeah, that's nice.
Were you surprised by this deal?
No, because I think it's kind of been rumored for some time. I think the level, the $40 per share, $32.50 in cash, plus some shares in the gift card unit was maybe a little light for what some people were hoping for. But I think the deal makes sense. It allows Albertsons and Safeway to combine under the Cerberus private equity umbrella and go after Kroger's, as well as, let's face it, it's a very competitive business. And they need to go after Wal-Mart. They need to go after the warehouse clubs that are now getting more into groceries. So I think this helps them do that. There is a go shop clause provision. Other people can come in and make a better offer within 21 days, Kroger, for example. But there also is antitrust, anti-competitive issues. Some folks thinking perhaps this doesn't get done. The stock's actually down today. Maybe because people are questioning whether it can get through that antitrust.
Well, but to a point you made earlier, there's virtually no premium for shareholders here. This is a $9 billion deal, and when the stock market closed yesterday, the market cap for Safeway was just under $9 billion, so they're only going to get a markup of 1 or 2%.
From yesterday's price, but I think the stock had been kind of bumping up and up and up over the last several months in anticipation of some kind of deal.
Speaking of bumping up, Skullcandy up big today, the maker of headphones. Their fourth quarter results were better than expected, but their profits were down nearly 70% for the quarter. How low were the expectations for this company?
Really low. This is one of those situations where the sentiment is just so low that anything positive can turn that. Even if it doesn't have to turn positive, it can just turn mediocre, and that can make the stock rise. Plus, you add in some short covering of people that thought this thing was done, and you can get a big pop like this. The company is doing some things that are positive. The future looks a little bit brighter than I would have said in the past, making sure their pricing stays firm, getting out of those off-price channels. I don't think there's much competitive advantage in this business. I would still not be a buyer of the stock at these prices.
All right, that is going to do it for this week's action. Let's look ahead to next week. Give me a stock that I can put on my watch list.
Looking very closely at Arcos Dorados, which has the franchise rights for McDonald's in Latin America and the Caribbean. They report next week. We've owned the stock for quite some time. We have some concerns. They're slowing their store growth. Argentina and Venezuela are really struggling from an economic perspective. So that's very important to the business. So definitely looking forward to seeing what they have to say.
All right, for Ron Gross, I'm Chris Hill. Thanks for watching. We'll see you on Monday.